Greetings from our team at Robare and Jones Wealth Management. This is Jack Jones, the managing partner, with an early August monthly market update to address what's going on in the markets. A lot has changed since we met about a week and a half ago at Perry's, where we had over 100 clients join us to discuss markets, and since the last July monthly market update from just a few weeks ago. So we thought we'd get some early comments out. We may likely follow this with another monthly market update later this month because things are changing quickly in markets and we wanted to keep you informed. So a lot has changed from, sometime last week, going from kind of a Goldilocks feeling of markets to now fearing a recession. A lot has changed just in the last 3 trading days, including Monday, August the 5th. One of the notable things was a really terrible jobs number on Friday. Only 114,000 jobs added. Unemployment ticked up to 4.3%. Negative revisions down 29,000. And interestingly, 10 of the last 14 months, there's been negative revisions. So a significantly weaker jobs picture is part of what's driving market volatility. The Fed also met last week and held rates in the 5.25 to 5.5 range, but did indicate that Fed cuts were in play for September. The market has priced in now an almost certainty as it relates to a Fed cut in September, which puts it a little bit longer than most cycles as it relates to last raise to first cut. On average, that's 10.5 months. If the Fed cuts in September, that'll be about a 15-month period of time. Just some other headlines to consume. Intel stock plummets most in 40 years is something that we're paying attention to. The 10-year had a radical move last week from the low 4s to 3.8 as we closed Friday, and even lower today during the trading day. So that's something we're keeping a close eye on. And Japan is really one of the catalysts for this decline, which is this is now dated down 12% in the most recent trading day. They're now in a bear market territory, the Nikkei, and a bear market is a decline of 20% from a prior high. So the Bank of Japan, whereas we're looking to cut rates, the Bank of Japan raised rates, triggering a sell-off and a sharp decline in the Nikkei again, which is now in bear market territory, down 20% or more from a prior high. As it relates to the NASDAQ is also in correction territory. Correction is a 10% decline from a prior high. 2.5% just on Friday, and continuing a sell-off into Monday's trading day. So that's also an event that we're following. And in fact, the kind of Mag 7, we look at zooming out a little bit, just over a 3 to 4 week period of time, how much these stocks have dropped, both in overall market cap and in percentage terms. The only stock as of this date that hasn't entered a correction territory is Apple. We also know Buffett made some big news late last week, selling half of his Apple share. So again, a lot going on for the markets to consume and a significant amount of increased volatility. From an earnings season perspective, it's actually not that bad. 285 S&P 500 companies have reported. And you've got total earnings up just under 10%, 80% beating on the earnings side, and 60% beating revenue estimates. So I'd say earnings season as of this point is still pretty good. Also, historically, when you see a spike in money market assets, that tends to be good over the next 3-year period of time. So in May of 24, we saw a $6.1 trillion weighting in money market assets. If we look at 3-year performance from prior peaks, you see that being very good for this dark blue, the US stocks, over the next 3 years. So our reasons, we outlined this in our last monthly market update and at our quarterly investment forum. We're starting with pessimism because the reasons for pessimism have picked up lately. There is now a greater likelihood of entering into a recession. Whether that will happen or not, the economy has so far avoided it. But definitely the recession odds are picking up. Part of that is based on a weakening consumer, and the most recent jobs number paints a weakening job market. As it relates to this reason for pessimism, this has actually turned more optimistic, which it looks like the Fed will cut in September. Geopolitical, with what's going on in hotspots throughout the world, primarily today, will Iran attack Israel? Just a lot going on in the world. Our earnings, again, have been overall pretty good, so we keep that kind of in the optimism camp. And within the last month, as it relates to an election, we've had an assassination attempt and the president say that the president's not running for a second term, which is the first time that's happened since LBJ in 1968. So a lot of kind of heightened concern about what's going on. And again, especially in the very short run, the reasons for pessimism have kind of won the day in the last few trading days. Now, the optimism camp is still that we do avoid the recession. Inflation has come down. The Fed is likely to cut rates in September. The markets anyway are pricing that in as 100% probability at this point. Earnings we've seen have held up. An election year, as volatile as that's been, will be over here in a few months, and the markets can adjust to what that means for 2025 and beyond. So with all of that in mind, again, a lot of heightened volatility. What's unique about what we're going through now is just how quickly things have changed. When the Fed met late last week, markets were kind of sanguine in kind of a Goldilocks scenario, and with a bad jobs print on Friday, evidencing a weaker consumer, and what happened overseas in Japan on Friday and into early this week has really given the markets a reason to be volatile. So with all that in mind, we're here to serve you. Let us know if you have any questions at all. We will keep you updated as to how all of these events impact you. We will also be sending out trade notes soon about an upcoming quarterly rebalance that will reflect all of these changes that I've spent a few minutes outlining. So until we see you again, be well, take care, stay in touch. It's an honor to serve you. Let us know if we can help. Take care. Bye-bye.